Welcome in. This is the pre-opening edition of Storm Stock Solutions. I'm Grant Mercer. We're heading into a holiday-shortened Christmas week, and right now the tone is cautiously optimistic. Futures are green, precious metals are on the move, and a lot of traders are still holding out hope for that late December Santa Claus rally. Let's start with what's driving the tone before the bell. According to reporting from MarkWatch, U.S. stock futures are higher in the early hours, with a modest bid under the major indices. The backdrop here is pretty classic for this time of year. Lower expected volume, a lot of institutional desks partially staffed, and an options landscape that can amplify moves when liquidity is thinner. On top of that, gold and silver are grabbing headlines by pushing to fresh record highs. When you see equities firm and metals at records together, it usually tells you two things. Risk appetite isn't dead, but there's still a strong bid for safety, and inflation hedges underneath the surface. Layered on top of that, MarketWatch has been highlighting that despite a rough start to December for stocks, historically the final stretch of the month can still deliver gains. One analysis from Francis Huber points out that the traditional Santa Claus rally window, those final trading days of the year and the first couple of sessions in January, often skews positive, even if the early part of the month was choppy. Traders are watching whether that historical pattern becomes self-fulfilling again, or whether the weak tape from earlier in December ends up capping any year-end enthusiasm. Now, in terms of areas of strength, the futures picture suggests broad-based interest at the open, but the standout narrative is clearly in metals, and anything tied to the precious metals complex. With gold and silver at records, professionals will be watching miners, royalty companies, and even some of the ETF products in that space for following through. When metals are at all-time highs into year-end, you can also see spillover into related themes like inflation-linked assets, commodity-sensitive currencies, and at the margin, even crypto is part of that alternative store of value bucket. More broadly, the Christmas rally conversation has traders looking at the usual suspects. Big tech that has lagged a bit this month, high-quality growth, and the major index ETF. After a rough start to December, some managers who are underperforming their benchmarks may use this week to do a little performance chasing into names that have worked all year, while others may simply be rebalancing into strength and locking in gains. That push-pull can create short bursts of upside if buyers overwhelm the lighter holiday selling. On the flip side, the absence of clear, new macro headlines today doesn't mean there's no risk. In fact, when there isn't a single dominant story, the fragility often comes from positioning and liquidity. Areas that have run very hard into year-end can be vulnerable to quick air pockets if a few big holders hit the sell button in a thin tape. So themes that look fragile are the overgowned high multiple pockets of the market, and some of the more speculative growth names that depend heavily on cheap money and confidence staying high. Those are the kinds of areas professionals tend to handle with care in a week where every order can move prices more than usual. Beyond the tape, some of the under-radar stories in the news flow this morning are really about personal finance and longer-term risk, and they're good reminders of what's at stake for real people behind these markets. MarketWatch's advice columns are full of questions from retirees and near-retirees. One couple in their 70s worried about homelessness with only about $100,000 saved, another family trying to split an estate fairly among children, and others asking if 7-figure retirement accounts are enough to step away from work. These aren't trading catalysts, but they're the kind of background narratives I keep an eye on because they influence how households think about risk, spending, and staying invested over time. Add to that a piece from Andrew Keshner on year-end tax moves that can lower your bill and potentially boost your refund. Again, that's not a single stock story, but late December is when tax loss harvesting, capital gains realization, and charitable giving can subtly distort flows in individual names and sectors. Traders will be watching for odd moves in beaten-down stocks that may be tied less to fundamentals and more to people cleaning up their portfolios before December 31. So, as the opening bell approaches, the setup looks like this. Futures pointing up, gold and silver at records, and sentiment leaning optimistic but still respectful of the risks after a bumpy start to the month. The big questions into the open. Does that bid in equities hold once real volume shows up? And do we see following through in metals and year-end positioning themes, or just a quick pop that fades in thin trade? We'll be back with intraday updates once the market gets going to see whether this potential Santa Claus rally has real legs or is just early morning cheer. Remember, This is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.